Trust is like the air we breathe. When it's present, nobody really notices. But when it's absent, everybody notices. Hello and welcome back to Exploring Finance with Prashant. I am thrilled to have you here as we continue our exciting journey in the world of financial shenanigans. In previous episode, we discussed about revenue manipulation by companies. Today, let's continue the discussion and delve more deeper into different revenue manipulation techniques used by companies. So, let's grab a metaphorical magnifying glass as we uncover the four shades of revenue manipulation. Now, this first technique involves simply dreaming up on a scheme that has the look and feel of a legitimate sale, yet it lacks economic substance. In these transactions, the so-called customer is either under no obligation to keep or pay the product, or no product or service has even been transferred in the first place. Take the example of AIG, a prominent insurer that imagined a world where clients consistently met Wall Street earnings expectations. They introduced finite insurance, a product that seemed to guarantee steady earnings. This product, however, was not true insurance but a set of complex financial transactions. An example involves Brightpoint Inc. facing lower earnings than expected. AIG crafted a retroactive policy covering Brightpoint's losses with no actual risk transfer. Brightpoint counted the policy amount as income while AIG booked the questionable revenue from premiums. Second shenanigan is recognizing that recording revenue from transactions lacking economic substance is never a valid practice. There are instances where transactions without a reasonable arm's length process might seem acceptable. However, as cautious investor, we have to be doubtful, right? Typically, when transactions occur between related parties without a fair and impartial exchange, the stated revenue tends to be overstated and is often misleading. Visualize a business, Sunlight Electronics, collaborating with an associate company, Moonbeam Technologies, both under the same ownership. Sunlight Electronics ships excess inventory to Moonbeam Technologies at an absurdly low price. This orchestrated exchange lacked market rationale, cast doubt on the authenticity of Sunlight's reported revenue. Just as a tree's shadow might distort its actual shape, this transaction distort the true financial standing of Sunlight Electronics. So far, we have talked about fake revenue from transactions without real economic value and those that lack a fair pricing process. So let's explore the cases where misleading revenue come from wrongly categorizing cash received from activities that don't generate revenue directly. It's important for investors to know that not all cash a company gets is considered revenue or linked to its main operation. Some cash comes from borrowings or selling assets. If companies claim regular revenue from these non-core sources, it should raise suspicions. An example of mixing these up is seen with Delphi Corporation, an auto parts manufacturer. In 2000, Delphi got a loan but wrongly treated it as a revenue from sale. This mistake not only led to fake revenue but also distorted their cash flow record. Another area to which we have to look is vendor rebates. When you buy things from a vendor, sometimes they give you cash back. This should adjust the cost of what you bought, not boost your revenue. Sunbeam, a company, played a trick by recording the cash advances to vendors as revenue. Royal Hold, which owns supermarkets, did something similar by manipulating the rebate to inflate their earnings. Both companies faced consequences for their actions. In the three manipulations that we explored yet in this episode, we have talked about revenue sources that were completely wrong due to lacking economic substance or not following proper pricing standards. Now, let's shift our focus to the companies that mostly follow the rules correctly for recognizing revenue. However, the issue here is a bit different but important. It's about recording the revenue in a way that seems too high or deceptive to investors. This could happen if a company uses the wrong method to recognize revenue or inflates it to appear bigger than it actually is. Enron, once a small gas pipeline company, evolved into an energy trading company. It applied aggressive accounting, inflating revenue through a technique called as grossing up. This tactic made revenue look high while keeping the profit margins low. Groupon, the e-commerce platform, also used a similar technique, booking gross sales without subtracting the merchant payouts. This caused an illusion of high revenue until the SEC mandated a change to the net method. Such practices can mislead the investors, as seen with Groupon's IPO success followed by a dramatic decline to the restatements. Advertising agencies in the e-commerce world also manipulate revenue by blending the online ad revenue with other fees. This can distort the true performance of commissions and inflate the reported sales growth. Now it's time to keep the magnifying glass down and see what have we explored today. First, we noticed that fake revenue arises from transactions lacking substance, like AIG's finite insurance that hid risks. Brightpoint's retroactive policy showcased misleading revenue from premiums. Then we understood that suspicion should arise when related parties show revenue without fair exchange. Sunlight Electronics and Moonbeam Technologies illustrate this distortion. Then we saw that Delphi's loan misclassified as revenue and vendor rebates inflated earnings. At last, we show that the proper transaction can still deceive through inflated revenue methods. Enron's aggressive grossing up and Groupon's pre-IPO revenue manipulation highlight this issue. Advertising agencies blending online ad revenue also mislead investors. We should always be aware what are the items that are included in the revenue of a company. Thanks for listening to this episode. In the next episode, we shall discuss some unsustainable manipulations that are done by management. Until then, keep questioning, keep learning, and keep exploring the captivating world of finance. Thank you. Have a nice day.